Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here I am recording it on Friday evening, October 25th, after the market has closed, and AMC closed at a price of $4.32, being down a little less than 1% on the day. And so, yeah, I wanted to follow up on the chart, really building upon last week's video, focusing on the more immediate price action over the past week. And then I will also be doing kind of a weekly options update as I am swinging a call option that expires next year. I think it's kind of a nice way to play the trade that I think AMC is going to be trading above $8 a share in the next 8 months. I think that's a pretty reasonable bet. But anyways, just looking at the chart here, so we've got the 5 trading days here following last week when we got this really nice green candle on Friday, the 18th, going up about 3.33% on the day, breaking out from this downtrending channel, and we have since consolidated. So I think it looks really good. But, I do think that there are some concerning things about the chart that I do think we might be pulling back perhaps to 424, which I talked about last week. But if that level doesn't hold, meaning if we get some closes below 424, I could see price coming down to $4.10 or possibly $4 a share, or, perhaps getting into the threes. As you know from prior videos, I think it's quite possible we could be heading down towards around $3.50, maybe a little bit lower, as there is this gap down here at $2.91. But that's something I more talk about in the options video, those two gaps there. And so I really just want to focus on the more immediate price action. And so what we can see here is we've kind of, seen this up and down over the course of the past week. And, one thing that I did add to the chart, I don't typically look at them. I do have the moving averages up here. So I've got the 21-day moving average that's in kind of this pinkish color. Current price is above that. So that level, the 21-day moving average, is about at $4.29. So I do think it is good that we are above that level. But I think it is a little bit disappointing that we did get rejected from the 200-day moving average, which is at a price of about $4.44. We wicked up above that level today, hitting a high of $4.51 before getting rejected and putting in this inverted hammer candle, which to me does suggest that this was a near-term top and that we will be pulling back some over the course of the next week, which could actually be a really great thing as earnings are coming up on the 6th. I believe I am not working that day, so I should be able to stream it. So it's always fun to, eat some popcorn, drink some Prosecco, and, enjoy hearing about our favorite company. So make sure you do tune into that. But with that being said, if we do see a pullback leading into earnings, but that pullback is not, getting sub 4, I think that could be setting us up for some violent moves to the upside as long as we are holding support. And, we don't want to get into the overbought territory before earnings because then there's probably going to be a sell-off. And currently, if we do look at the RSI, we're about neutral at 46.7. 50 would be neutral. Getting to 70 would be in the overbought territory. So if we see a lot of strength before earnings, I think we could see a downside move after. But if we see RSI cool off or, just some more consolidation here, that could be a great sign that we are forming perhaps some bullish consolidation before breaking out to the upside. And speaking about the upside, since we did hit a high of right around $4.50 today, there is this 786 level in red. Might be a little difficult to see, but that is at a price of $4 and just about 50 cents. And so if I do take a step back, we can see where that level originates from, and that actually goes back to this run up from when we hit the low of $4.10 on May 31st and rallied up just over the course of about a week to the high of $5.96 on June 6th. And so, from that upside move, the 786 is at $4.50. It does look like that was acting as some resistance. And then just above that, you might be able to see that yellow line just above the cursor. That is the 50-day moving average, which is currently at a price of about $4.61, and it does happen to correspond very nicely with this downtrending level that I have drawn here, going from that high that we hit on June 6th, intersecting with the other pivot high here from August 1st. So that is how I draw that downtrend. If you're curious to have it on your own chart, you can draw it just like that. Very easy, those two pivot points. We can see a number of wicks getting rejected from that level, especially over here. And, that being above current price by about 30 cents. And so with the 50-day moving average being right around there, I do think that downtrend is going to be some notable resistance. So good to be bracing for a breakout from that level. We will need to be met with volume in order to break out. And so as time passes over the course of the next week, that downtrend may be intersecting or will be intersecting actually right around when earnings are due out. And so I think that if we are consolidating below $4.50, I think that moving average along with that trend line will be just above the stock price before earnings. And if those earnings are great and we do see price action reflecting how great the earnings are, which I suspect they'll be pretty good because, there's been a lot of great movies. I don't believe Deadpool and Wolverine was included in their last earnings report because it was just coming out. We've also seen a number of other great movies. And so, I think, and also with other great movies coming up, Gladiator 2 and, Beetlejuice. Beetlejuice just came out, don't say it a third time. And so I think that we could be seeing finally some really good price action around earnings, and that could coincide with a breakout from this downtrend, a break above the 50-day moving average, and actually getting, all of those moving averages below current price. We could really see the stock take off. But, like I did say, this inverted hammer candle that we're seeing does suggest rejection as we have that big wick up. Buyers could not hold the price up that high. So I do think we could be pulling back. And like I said, I think $4.24, which I mentioned last week, could be acting as some very key support. So I would like to see us holding that. Maybe we do get some wicks below it like we saw on Wednesday and Thursday of this past week. But ideally, we maintain closes above that level, as the close on Wednesday, the 23rd, was at exactly that price of $4.24. So let's keep those closes at or above that level. I think that would be great. But if we do start to close below it, like I said, 410 is down here. That actually corresponds with a prior bottom. That bottom that we hit on, let's see, which was May 14th. I'm not sure. I'm going to have to take a step back to double check that. I believe it was May something here. May 31st, right before moving to that high of 596 on June 6th. And so that low, we really haven't traded much below $4.10 other than when we got these two candles down here. So, I would look for that to be holding as well. And if not, I do unfortunately think that $4 or right around 404 or this low here at 403 might be tested again. But another thing that we can do that I actually forgot to do last week is draw a trend line underneath the current stock price over the past few weeks, just to see if we are upholding a trend line. We want to be seeing higher lows be put in. And so since I did forget to do this last week, I'm just going to start it how I would have drawn it. So going from this low of 403, intersecting with the low from a couple Thursdays ago on October 17th. And as you can see clearly, we have broken below that uptrend. So that is fairly discouraging. However, we are still putting in higher lows. So if I do adjust this and move that pivot point to the low that we saw on Thursday, which was at a price of $4.16, or I could even move it to the low from Wednesday, which was $4.17. We might have this wick below that level, but we have not seen any closes below it. So I do think that is a good trend line to be keeping in mind. And if we do pull back to 424, we could still be respecting it. And if we don't get to 424 and we fall back to that 21-day moving average, that could also still be holding that uptrend. So looking very good there, a number of levels to be keeping an eye on to the downside. One being 424, another 410, and then the other one being about $4 right around there. And also, of course, keeping an eye on these moving averages. But one thing that I did want to do is look at the 10-minute time scale because I think that will be telling to see, what went on in forming this inverted hammer. I was really looking forward to seeing price continue higher, not only with AMC, but also GameStop, other stocks I saw rallying, but we did get a sell-off. So, I am just going to remove the moving averages so we don't have too much clutter. Just going to zoom in on the chart here and switch over to the 10-minute time frame. And so we can see here the pre-market trading, the market hours trading here on the 25th, and then the after hours trading into the close on Friday after hours trading session. And so what we can see here is, really like the first hour and a half, we saw some nice green moves, candles holding up here, bullish consolidation, and then a breakout with this massive candle going up 2.3% right around 11 a.m. And then we did see, a high for that candle at a price of $4.50. Not only that corresponding with the 786 that I had previously talked about, but also that being a psychological level, $4 bills, 2 quarters. We do tend to think in whole numbers, halves, quarters, things like that. And then we got this wick higher in the following 10 minutes, going up to $4.51 before getting rejected and then fading into the close. And so unfortunately, I view this as not really looking so great with this fade to the downside. However, if we do think about this, so if we think about big money, what's big money doing on a Friday? Do they want to be trading into the end of the market day, or do they want to, have a long weekend, get off work early? And so I wonder if maybe there was some pump going on at the beginning of the day, take profits and then let it fade. Or maybe this is just, retail relaxing on Friday, not wanting to buy. I am not really sure, to be honest. I am not used to analyzing the chart like this, but I do think that it is pretty interesting to look at how that wick high, which could be a topping wick, was formed. And it was really just, a few candles over the course of about 30 minutes when we did see this breakout before pulling back to below this 786 here, marked at $4.41. And so before I close the video, I am just going to highlight where that level comes from because I do think it is pretty interesting. So switching back over to the daily time frame, we can see these two gaps here, the one to the downside at 291, the one to the upside, which I suspect we will fill before this one to the downside, and that upside one is at 685. But I'll be talking about those more in the options video, which will come out sometime next week. And like I had mentioned, this 786 at 441 is, the 786 retracement from the lows, the all-time lows that we hit on April 16th of $2.38 before we hit this market hours high of $11.88 before pulling back. And so, I do think that is a significant level, but, thinking about the price action that we have been seeing, I think it's a little more telling that we did get rejected from 450, put in this big wick here, also had, a pretty big wick here on the 21st, which was Monday. So, I do think that getting above about 435, 436 is pretty tough. We haven't seen any closes above that level following last week's close, which was at 436. Closed a little bit lower than it this week, but I do think it does look like we are holding this uptrending level. Let's see, let's follow up next week to see if we are continuing to hold it. before, we start to prepare for earnings week coming out the following week, with that being on November 6th. And so, I hope you guys are all looking forward to your weekends. I hope you're looking forward to going some movies, enjoying our wonderful company, some delicious popcorn, and some good company. And so, with all that being said, not only about the weekends, but also about the stock, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot, and take care, you guys.